Good morning, everyone. This is Angelos Zittis from IronFX, bringing you the morning comment for the 3rd of August. Market focus on U.S. employment report. The U.S. employment report for July will be released today at 12:30 GMT. The non-farm payrolls figure is expected at 190K, while previous figure was 213K. The unemployment rate is expected at 3.9%, while previous reading was 4%. And the average earnings growth rate is expected to remain unchanged at plus 2.7% year on year. Overall, if actual figures meet the forecast, the indicators show a rather tight labor market. However, it should be noted that the drop of the NFP figure blurs the whole picture somewhat. A strong employment report should support the USD. However, note that the greenback is strengthening since yesterday on trade war issues. Euro USD dropped yesterday, breaking the 116.40 support line, now turned to resistance. As the pair broke the lower boundary of its sideways motion, we lift our sideways bias in favor of a bearish market. We could see the pair continue to trade in a bearish market as the US employment report could strengthen the USD side. Technically, the downward trend line incepted since the 31st of July supports the notion of a bearish movement for the pair. On the other hand, the RSI indicator is approaching the reading of 30 in the 4-hour chart, implying an overcrowd short position. Should the pair continue to be under selling interest, we could see it breaking the 115.80 support line and aim, if not break, the 115.10 support barrier. On the other hand, should the pair find extensive buying orders along its path, we could see the pair aiming, if not breaking, the 1.1640 resistance line. Bank of England hikes, but pound drops on dovish comments. Bank of England hike rates as expected yesterday, reaching the plus 0.75% level. In a surprise unanimous 9-0 vote, the hike temporarily strengthened the pound, and especially the 9-0 vote count, as it showed the bank's decisiveness for the rate hike. However, in the press conference later, dovish comments made by BoE's Governor Carney weakened the sterling substantially. The comments included remarks such as the monetary policy would need to walk, not run, and the repercussions of a hard Brexit. The pound may continue to ride a bearish wave today at the aftermath of comments made, and as the previous PMI for July is forecasted to drop to 54.7 compared to previous reading of 55.1. Cable dropped yesterday, breaking consecutively the 130.90 and the 1.3035 support lines, now turned to resistance and stabilized later on. We could see the pair continue to trade in a bearish market as the USD side of the pair could be supported by the release of the US employment report. Should the bears continue to rule the pair's direction, we could see it aiming, if not breaking, the 129.60 support line. Should the bulls be in the driver's seat, we could see the pair breaking the 130.35 resistance line and aim for the 1.3090 resistance hurdle. In today's other economic highlights, in the European session, we get UK services PMI for July and Eurozone's retail sales growth rate for June. In the American session, we get Canada's trade balance figure for June. And from the US, the trade balance figure for June, the ISM manufacturing PMI for July, and the Baker Hughes oil rig count figure. As for the week ahead, please refer to our next week's outlook to be released later on today. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. You can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Angelos Zittis from IronFX, wishing you solid trading.